In this video, we are going to be analysing Faze holdings. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, we're going to be analysing Faze today because there has been a lot of drama surrounding the actual Faze brand to do with their OG members and the people who kind of built up the brand, now to do with their corporate. Again, this has been happening for a while, but another big event happened between Faze, Rain and Grace. So we're just going to go through the analysis. So if we do start getting movement in this stock, we are prepared for the movement. Now, on Faze, not a stock I would touch to the downside. The reason for that is, firstly as well, we can see our 52-week lows and all-time lows are around 36 cents. Considering highs of $25 again, I would be cautious. And again, still a relatively recent IPO, so again, do account for that, but just because it's at lows doesn't mean it's a great buying opportunity. And considering how strong we've been downtrending, we can see we don't have any deviation levels as supports. We can see that the statistical mean on the 1 year is -$3 and statistical mean on the 6 month is -$2. So this basically means we have no supports from a deviational standpoint. So what this usually means is, again, I'm not looking to trade this if we continue to the downside. So where would I be looking to trade this? And as we can see on both that 6 month and the 1 year chart, we are downtrending. Obviously, if you went from $15 or $25 down to 35, obviously that is a massive and strong downtrend. So the way I would be looking to trade this is if for any reason we do get a pop, then that is really where the main trade plans are going to come, and it's just going to be trying to catch the shorter and longer term trend of the downtrend, and that's going to be $1.58. That's going to be that first level to be paying attention to as we come into here. Again, looking at it, short bias from this level or above. If we do break that, we then have another level at $2.20. So again, that would be the main two levels and kind of key range I'd be paying attention to. If we do pop for any reason, this is going to be a key range of resistance. Now, Faze does have options, so again, that can be one way we could be looking at trading this. It is hard to borrow, so we may struggle shorting the shares. So again, that means there's really two ways in we can play it, and that will be through the option chain. Either we can buy outright puts, or we can go through playing vertical spreads. And again, that will give you a risk-defined method of trading the stock short bias if it comes up to these kind of levels. Obviously, we do need volume right now. There is basically no volume traded, but if we do start popping, then again, you'll probably see a lot of volume, even if it's only from retail traders coming into the stock, into those kind of $1 and above. So those would be the two levels I'd be paying attention to. If we did spike high for any reason, we would be paying attention to 510, 775. Again, these are very far off from where we are now, so I don't think we really need to note any more resistances. It's more, if there's a big move in the stock, then again, we're paying attention to about $1.60 to $2.20. But again, also do be cautious on this, just because it's near lows. Again, not something I'd be buying. What's more than likely going to happen is either one or two outcomes. Most likely, they're not going to be able to naturally increase their share price back above $1. They've already had their notice from the NASDAQ. So again, if they can't get their stock above $1, they will be delisted. So again, they'll become OTC. So again, not something you want to be holding if that happens. And another thing that will happen or may happen is if they don't want to get delisted, they can potentially go through a reverse stock split. So again, what it might do is turn, say, a 1 to 10. So it means for every 10 shares you own, you now own one. But instead of it being priced at 50 cents, it'll be priced at $5. But again, whenever you see this, still not a reason to ever be looking to buy. The only reason a stock does a reverse stock split is because they are about to be delisted. So they do that reverse stock split to avoid their delisting. And usually what happens is as soon as it pops back up to say that $5, this is the reverse stock split level, you will just tend to trade back down and in time push back down to its 50 cents again. And then again, then you'll probably see that reverse stock split happen once again. You're seeing it on a lot of stocks, especially right now, where people are kind of a bit more risk managed. And again, this environment, you probably don't want to be taking all the risk. People are going away from the smaller caps, so it's leading to a lot of them selling off and again requiring to do reverse stock splits. But again, always a massive risk for investors. If you're investing in stocks doing reverse stock split, you really need to be willing to lose whatever you have in that company if you are really holding that. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.